Let's talk about the two hottest letters in the world right now. AI, artificial intelligence. It's not science fiction anymore. It's shaping your money, your savings, your retirement, and your kids' college funds. Why is Wall Street obsessed? Because AI promises to do things faster and smarter than any human. It can analyze millions of data points in seconds, spot invisible trends, and predict winners and losers with uncanny accuracy. That's the dream fueling this frenzy. A new gold rush for wealth. But here's the catch. When something sounds too good to be true, it usually is. The hype is real. People are throwing money at anything labeled AI, hoping to strike it rich. Hype clouds judgment, and you can't afford that when your financial future is at stake. This isn't just a trend, it's a fundamental shift in finance. Ignoring it isn't an option. You need to face it. Get educated, and separate real opportunity from noise. We'll break it down, what the big firms are saying, the risks, and the real opportunities. Because being a smart investor means being an informed investor. Don't get swept up in the buzz. Get clear, get confident, and protect your future. We're about to cut through the noise and show you what matters. The AI wave is here, and it's touching your wallet whether you like it or not. So, are you ready to get smart about AI and your money? Let's dive in and make sure you're not left behind. This is your moment to take control. Let's get started. When Morgan Stanley talks, Wall Street listens, and so should you. They see AI's potential, but they're also waving a caution flag. The big story? Disruption. AI could upend industries and crown new market kings. But real disruption is messy. Sometimes, old giants adapt and win, while newcomers flame out. It's not as simple as betting on the next big thing. Morgan Stanley also asks, will AI's profits justify its massive costs? Billions are being spent on research, chips, and talent. Not every company will see a payoff. The benefits of AI won't be spread evenly. Some will win big, others will waste fortunes. The lesson: don't get blinded by headlines. Dig deeper. Morgan Stanley isn't anti-AI. They're pro-reality. They want you to see past the hype and think critically. Some companies will soar, but many will stumble. Smart investors look for nuance, not fairy tales. Don't be a cheerleader or a doomsayer. Be a realist. That's how you invest wisely in the age of AI. If only all the experts agreed. But with AI, the debate is fierce. Some see a revolution, AI as the next internet, creating trillion-dollar companies and changing the world. Others see a bubble, driven by hype and fear of missing out, not real profits. Remember the dot-com crash? The story was true, but most investors lost big by betting on the wrong names. The disagreement is healthy. It forces us to ask tough questions. Is this truly different? Which companies will win? And which are just riding the wave? Smart investors listen to both sides, blending optimism with caution. Don't pick a side. Pick a strategy that balances risk and reward. That's how you make intelligent decisions with your money. AI isn't the future. It's already transforming investing. Algorithmic trading now uses AI to analyze data, spot trends, and make trades in milliseconds. Hedge funds and banks are pouring billions into these systems for a competitive edge. Robo-advisors use AI to build and manage personalized portfolios, adapting to your goals and risk tolerance. AI helps human analysts sift through mountains of data, finding patterns and building better forecasts. The result? A partnership between human judgment and machine speed. AI is now the super assistant in finance, not a replacement. This is the new standard. If you're investing, you're already in the AI era. The question is, are you using it to your advantage? Let's look at the bull case for AI. Bulls see AI as the next productivity engine, like the steam engine or the internet. They believe AI will boost profits, create new industries, and make today's leaders even stronger. The picks and shovels companies, those building chips, cloud infrastructure, and core software, are seen as the big winners. Bulls argue we're just at the beginning, and the real payoff is decades away. High stock prices? They say it's justified by future potential, not current profits. It's about vision, seeing the world AI will create, not just today's numbers. For bulls, the risk isn't buying in. It's missing out on the next great wealth creation wave. That's the optimistic case. But is it the whole story? Now, let's hear from the bears. Their main worry: valuations. AI stocks have soared, maybe too far, too fast. They see echoes of the dot-com bubble, where hype outpaced reality and fortunes vanished overnight. Bears warn that competition will heat up, turning today's breakthroughs into tomorrow's commodities. Profits could shrink as more players enter the game. And what about regulation, job losses, or unpredictable AI failures? These risks are real and hard to price in. The market may be ignoring the unknown unknowns. The bears say, don't get swept up. Caution is your best friend. The AI story is exciting, but it's not risk-free. Smart investors respect the downside as much as the upside. Bulls say buy, bears say run. What should you do? The answer? Balance. Start with a diversified foundation, broad index funds or ETFs, not just AI stocks. If you want to bet on AI, keep it small, maybe 5% of your portfolio, and use sector ETFs to spread risk. Don't chase hype. Do your homework. Know what a company actually does, and if it's profitable. Be ready for volatility. AI stocks will swing wildly. Never invest money you can't afford to lose. Investing in new tech is a long-term game. Think 5-10 years, not 5-10 days. Stay disciplined. Don't panic on the dips or get greedy on the highs. The smartest investors combine curiosity with caution. Build your plan, stick to it, and adjust only as your life changes. Don't let FOMO drive your decisions. In the AI era, discipline and diversification are your best tools. That's how you win, no matter what the headlines say. Can you afford to ignore AI? Not just as an investor, but in your whole financial life? AI is changing jobs, banks, and how you manage money. Some tasks will be automated, but new opportunities will emerge for those who adapt. Lifelong learning is key. Use AI tools to boost your skills and stay valuable. In personal finance, AI is already fighting fraud, deciding loans, and managing investments. Don't be a passive consumer. Ask questions. Understand how AI is shaping your financial world. Ignoring AI is a vote to be left behind. The world is moving fast. Embrace change, stay curious, and keep learning. You don't need to be a tech expert, but you do need to be informed. The companies and people who adapt will thrive. Don't let fear or confusion hold you back. AI is here. Make it work for you, not against you. Stay engaged and you'll stay ahead. We've cut through the AI hype and seen both sides. The rules of smart investing haven't changed. Live below your means, avoid debt, save, and invest for the long term. Don't let new tech tempt you to abandon your foundation. Speculative bets should be small, built on a rock-solid base. Be an empowered investor. Do your own research, know what you own, and stick to your plan. Review and adjust as your life changes, but don't chase fads or panic at headlines. Discipline is what separates investors from gamblers. You can't predict the future of AI, but you can control your approach. Listen to both the bulls and the bears, and always prioritize diversification. You now have the tools to separate hype from reality. Stand tall, stay informed, and keep building your financial future. The AI era is here. Be the strong, smart, and secure investor you were meant to be. This is your time to take control. Now that's what I call being approved.